Hello everyone, welcome back to my YouTube channel. Today we are diving into a short but important topic in cost accounting, that is non-cost sheet items. Okay, so here when we prepare a cost sheet, our goal is to find out the total cost of production and sometimes the cost of sales, right? But there are certain expenses and incomes that we don't include in the cost sheet. So these are called as non-cost sheet items. Clear? So what are these items that are excluded? So let's break them into two categories. Okay, they are incomes and expenses. First, let's see the incomes, they are not included in the cost sheet. In that, first one is interest received, second one is dividend received, third one is profit on sale of fixed assets, fourth one is rent received, fifth one is commission received, sixth one is any abnormal gain. So these all are incomes, they are not included in the cost sheet. In that, first one is interest received, means it is the income earned by a business on its investments or bank deposits or loans given to others. So it is a financial income. Okay, so that is not related to the manufacturing process. So it is not included or excluded from the cost sheet. And second one is dividend received. What about this? It is the income business earned from its investments in shares of others, of other companies. So it is also a financial income and excluded from the cost sheet. So this is about dividend received. And next one, third one is profit on sale of fixed assets. It means what? It is the gain business makes when it sells its assets like machinery or any building for more than their book value, then it results into profit on sale of fixed asset. So it is a capital profit and not related to regular production. So it is also not included in the cost sheet. And next one is rent received, means it is the income earned by a business from letting out its property or premises. So it is a non-operating income and not related to the core production process. So it is excluded from the cost sheet. And next one is commission received. Here commission received, it is the income that is earned by a business for providing services like promoting or selling the products on behalf of others. Then business will earn commission. That this is about commission received. So it is also excluded from the cost sheet. Next, sixth one is any abnormal gains. It means what? Here abnormal gains means what? They are the unexpected or unusual profits, such as insurance claims received for overestimated losses. Then it becomes abnormal gain, right? So since they are not part of the regular business operations, they are considered as non-operating incomes and they are excluded from the cost sheet. Clear? See, these are the incomes, they are not included in the cost sheet. In that, first one is interest received, second one is dividend received, third one is profit on sale of fixed assets, fourth one is rent received, fifth one is commission received, and sixth one is any abnormal gains. Now let's see the expenses, they are not included. So these are the incomes, and now let's see the expenses, they are not included in the cost sheet. When we prepare the cost sheet, these expenses are not included. Clear? In that, first one is loss on sale of fixed assets. It means what? Business sells an asset for less than its book value. Profit means more than its book value. Here loss, it means less than its book value. So it is a capital loss, not related to the production process also. So it is not included in the cost sheet. Second one is interest on loans or overdrafts. Interest on loans or overdrafts. So it is a financial expenses incurred for borrowing funds from banks or any financial institutions. Clear? So it is also not related to the production process and it is excluded from the cost sheet. Third one is donations and charity. It means what? They are the voluntary expenses made for social purposes. Clear? As they are not related to any production or business operation. So that is not included in the cost sheet. They are voluntary expenses made for social purpose. Next one is income tax. Income tax. It means what? It is a statutory payment made on the business profit to the government, means income tax that we will pay to the government, right? So it is a financial and legal obligation. It is a financial and legal obligation that is not at all related to the production process. So it is this item also not included in the cost sheet. Clear? Next one is, fifth one is preliminary expenses written off. It means it refers to the gradual charging of initial business setup cost. Initial business setup cost like any legal fees or any registration charges, they are the initial business setup cost. Okay, so these are unrelated to the production and not included in the cost sheet. Next one, sixth one is abnormal losses. Abnormal losses like abnormal gains. Here in expenses they are abnormal losses, means they are also unexpected or unusual losses, such as those caused by fire or any some accidents. Okay, since they are not part of the normal production activities and they are excluded from preparing the cost sheet. So the expenses, they are not included in the cost sheet. They are loss on sale of fixed assets, interest on loans or overdrafts, donations and charity, income tax, preliminary expenses written off and abnormal losses. Clear? In the problem they will give any items whether they are income or expenses. Okay, you have to write down the note at the end of the problem, solved problem. Okay, means these are the incomes or they are the financial or non-operating incomes, they are or they are the financial expenses. Clear? They are not included in the cost sheet or they are excluded from the cost sheet. Like that you have to write down the note at the end of the problem. Clear? So I hope this concept is clear to you all. Clear to you all, that is non-cost sheet items. Okay, if you have any doubts, please leave a comment. Thank you.